Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the Fear and Greed Index. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below and the pinned comment. Let's go ahead and jump in. So, I like to cover the Fear and Greed Index about every month or so. I think it provides a suitable insight into the sort of the inner workings of the cryptoverse. If you're not familiar with the Fear and Greed Index, it comes from this website. I'll link it down in the description below if you want to find it. Um, but essentially, what it does is it basically tells you how fearful the market is, how much greed the market is feeling at any given time. And today, the market is quite fearful. The Fear and Greed Index is coming in at 30. Yesterday, it was 28. Last week was 31. Last month was 74. So there's actually been a lot of volatility in the Fear and Greed Index. And again, the Fear and Greed Index is made up of a lot of different things, including volatility, market momentum, social media. That's something we've covered a lot as well. Social risk, surveys, which is currently paused, dominance, right? Bitcoin dominance, and Google Trends. So it uses a lot of different things, and it then combines it all together, weighted, of course, by those categories, and creates the Fear and Greed Index. And one of the things that I've said, and you probably heard me say this honestly more times than you wish you had, right? And that is how this year has really been similar to 2019. And one of the things that a lot of people ask me, they're like, "Well, is this like 2021, right? Is what we just saw similar to 2021?" And my answer is no. And I've said that many, many times, right? My answer to that is no. This is not a similar type of move as what you saw in 2021. And one of the reasons for that is if you go look at the social risk back in 2021, the social risk was quite high. And it was also accompanied by a lot of money printing and a lot of retail investors. And back over here, when there was a lot of social interest in the space, obviously Bitcoin went parabolic. But you can see that earlier in the cycle, the same year that we had rate cuts, that was when Bitcoin had this other rally over here, where the social risk only went up to around the zero point 0.3 to zero point 0.4 risk band, more or less similar to what we've seen in 2024, which is why I think that it makes more sense to compare this to what happened in 2019. What's fascinating, and I actually talked about this on the day, I believe, well, on the day it happened, or within a few days of when it happened, was that if you look at the Fear and Greed Index and you only look at when it went to 90 to 100, and you look at what happened in 2020, 2021, there were several days where we were in extreme greed. But I said back then that I did not think we were repeating what happened in late 2020 and early 2021, because this was more similar to what happened in 2019, which was a rally where Bitcoin rallied about 350%, same as this rally more or less, during quantitative tightening. And you can see that in the same way, there was only one or two data points in these rallies that reached extreme greed. There's no coincidence, right? A very similar outcome. And if you look at just say 80 to 90, this to me looks a lot more like what we saw back over here in 2019. Now, of course, back then you could have tried to make the argument that it was similar to August of 2020. A lot of people try to make that argument as it relates to altcoins and their calls for alt season. But you can see, fast forward half a year, it played more. It played out more like 2019, where you went into this extreme greed, and then every rally after that, at least for about half a year or so, results in lower highs. And that was the exact same thing that happened in 2019, and now we've seen it play out in 2024. So one of the things we also mentioned back then, if you guys go back and watch the videos from half a year ago, I said that once you go to the 90 to 100 fear and greed level, you typically go back down to some of the lower levels in the not so distant future, right? You can actually even see that we went below 20 right here just a couple of weeks ago. And if you go back to 2019, you can see that also happened on these sort of these wicks to the downside by Bitcoin before it consolidated for a while, then ultimately went up and put in another lower high. So it really is similar, and it has been similar for quite a long period of time. This whole pattern that we've seen, and I think the fear and greed index even adds to that. One of the things you can also do, which I think is useful, is to look at the raw values. And you can see how different it is from 2020, 2021, and how similar it was to what happened in 2019, where you just had a spike up into the highest fear and greed band, 90 to 100, and then it sort of just slowly worked its way back down, where you came back down here, into the teens, and you just kind of hung around there for a while. And it doesn't mean that you never saw bounces. Of course, the fear and greed index is going to bounce whenever Bitcoin price goes up, as you can see. But it took a while, right? It took more than half a year for the fear and greed index to start durably going back up. And so I just wanted to come on and say, look, guys, this is something we've talked about a long time. We talked about this 2019 comparison for it seems like forever, and just so much of the data continues to support it, whether it be the fear and greed index, whether it be the social risk, whether it be the devaluation of all Bitcoin pairs and how that relates to Bitcoin dominance. And also interest rate cuts, right? We're likely going to see the Fed cut interest rates in September, and in 2019 they cut rates in July. So it really does just provide more evidence that it's really similar to 2019. And again, I mean, as I've said before, these things can take place over, 6 to 9 months, and it's already been 5, right? It's already been 5. So we'll keep making the comparison and see if this pattern continues to unfold or not. Because so far it has, and the whole 2019 sort of move has sort of repeated itself over here in 2024. And now I know a lot of you guys are probably thinking, well, do you get something like what happened in 2020? It's possible, right? It depends on if you get a soft landing or a hard landing. But when making the comparison to 2019, I've only been talking about 2019, right? What happens in 2020, that's a different comparison. Right? That's a different discussion. And that's going to be dependent on whether the Fed engineers a soft landing or a hard landing. In 2019, you could argue they engineered a soft landing. We had an inverted yield curve. We had rate cuts. The market started to go back up, and then the pandemic came, and obviously led to a hard landing. But I really like the fear and greed index, and one of the things that I've mentioned before as well is it might be worthwhile to apply a moving average to it, right? Like a 30-day EMA. The reason for that is because it can help you better identify, rather than just looking at the wicks, right? Remember, the volatility of it is quite a lot. You go last month, it was, greed, 74 is almost extreme greed. And then today it's at 30. So by looking at it like this, you can see that the fear and greed index, right? I mean, it really topped out here in March, not that much higher than where the 30-day EMA topped out back in 2019, in fact, right? Like, it's more similar to 2019 than what we saw in 2021, right? Where it went a lot higher because it maintained that extreme greed for much longer, right? So, and right now we know the fear and greed index is at 30, the 30-day EMA is at 38.79. So this is likely going to continue to drop, at least in the short term, until the fear and greed index goes back up, and then it might bounce. But a very, very similar pattern has continued to play out with the fear and greed index. Remember, historically, when you go, and I said this back in March, and I wish more people would have sort of heeded it back then, especially as it related to altcoins, because if you did heed it back then, especially when gold was breaking out and USDT dominance was hitting its long-term trend line, it probably could have helped you preserve some of the gains you might have had if you were speculating in the altcoin market, because they have been hit pretty hard recently. So, maybe for future reference in a future cycle, if you're in high interest rate quantitative tightening environment and Bitcoin fear and greed index goes above 90, that might be all you get until loose monetary policy returns, because now you have 2 cycles where that's what happened. QT, high rates, 300 to 400% rally in 2019. Same thing over here in this move as well. So I think it's fascinating how history does tend to repeat itself, even though it's easy to convince ourselves that it's not. And then you fast forward and it's like, yep, it kind of was just the same thing when you think about it. And it does make sense. And monetary policy, I think, does play an important role. And just to wrap it up, I know this is a video about a fear and greed index and whatnot, and that's what I mainly wanted to talk about. I want to keep the video shorter because I'm probably going to be making some longer videos over the next couple of days, so we'll keep this one a little bit shorter. But one of the things that I think should be, and I didn't really want to make a whole video about it again because I just did a video on Bitcoin dominance, but one thing that I think is proof. It should be proof how important monetary policy is for the cryptoverse is because if you look at Bitcoin dominance without stablecoins, coming into this year, I said, guys, I know historically everyone's looking at what happened by Bitcoin dominance in prior halving years in 2016 and 2020, where it went down. But I said, guys, I think it's going to go up this time because I think it's more based on monetary policy. Now, back then, a lot of people were very critical of this view because they were saying, you're saying this time is different. But what's interesting is, in fact, that's not what I was saying. That's not what I was saying. I was saying this time is the same because if you look at what happened in 2019 when the Fed cut rates, you can see that dominance went up. So it's easy to say, sort of mock and say like, oh, well, you're saying this time is different when only looking at halving years, right? And saying like, all right, well, it only depends on halving years. So that's all that Bitcoin's going to do. That's all dominance is going to do. It's going to follow what it did in prior halving years. But that's, it's easy to fall into that trap and be like, well, this time's not going to be different. But if you think that monetary policy plays a role, then you don't compare this to 2020 or 2016, right? Where dominance went down. You compare it to the last time the Fed began to cut rates, and that was in 2019, where Bitcoin dominance trended up for most of the year, and it actually topped out in September. I think there's a good chance you could see dominance top as early as September. So I think it makes sense to be prepared for that. It could take as long as December, but I'm thinking September could be the first real chance that dominance could at least temporarily top out. But we'll see, and we'll see how it plays out over the next month or so. And also, it's going to happen to correspond to the first rate cut, right? The first rate cut's theoretically coming up here in September. I don't know how I got on this. I mean, I know this was videos about the fear and greed index, but the point, right, is that when you look at the fear and greed index, right, when you look at the fear and greed index, you can pretty clearly see that 90 to 100, when it happens in QT, high rate environment, it only triggers for a day or two, right? And then you spend a while going to lower fear and greed levels and spending more and more time at those levels with occasional bounces back up to the upside. But it tends to trend down once that loose monetary policy arrives, then it could perhaps reverse course. But this is what happened last cycle, and it seems like it's what's playing out yet again. So if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.